It's so convoluted on this Friday. Are we just all going to wait to see the data? I mean, it's that simple.
Well, in a way, it's brought back the old art of Fed watching, where Janet Yellen's just going to let the data do the talking for her. She's not interested in going out and making big proclamations. But yesterday, we had such a strong retail sales report, not only in terms of what was going on in May, but also backward revisions for April and especially for March. It's tempting to take a victory lap and say, cooler heads are going to prevail and the U.S. is going to pull through.
A big thing for you guys has been the market out in front of the Fed. Maybe the best thing for Chair Yellen this week was that the markets actually began to catch up in terms of higher yields where she wants them to be.
That's exactly what she's looking for. I mean, you've got to remember that the Fed has got to keep everyone honest. That's their job, is to make sure that we don't get another taper tantrum. So we were talking last week or the week before about Christine Lagarde telling the Fed what to do. The reality is that the IMF has a very different kind of game to play, and they've got to be worried about the downside risks. They've got to worry about stability issues. The Fed's got to worry about the bond market and about the housing market.
Let's look where we are, Vonnie. Speaking of the post data here, how about our gross domestic product, our economic growth year over year? It just ain't where it used to be. There's a rough approximation, a trend line in red. For those of you on radio, I'll put this out on Bloomberg Radio Plus here digitally around the world. And we're just not back, Vonnie, where we were in the late 90s.
No, we're not. And we heard that from Michael Froley this week, too, although there are different opinions. Goldman Sachs obviously not seeing that weakness. But, Josh, let me ask you, we don't know how well the first quarter did yet. We don't know whether this is something that we see every year in the data. How long is it going to take for the Fed to start trusting, if you like, the data again?
Well, I think what we're seeing here is, of course, that some of the elements of the GDP are actually estimated, and as more of the real data come in, then we see that things are getting revised upward. The other thing that's gotten less airplay is that there's the quarterly services survey that was out just this week, and that showed that that's also going to support GDP. People are talking about being revised upwards towards flat rather than a 0.7% decline in the first quarter. So another sign that things are looking up in the U.S.
Josh, you spent so much time wandering around the world working for international organizations. When we look at what the IMF has done and what the World Bank has done in the last 5 days, do they know what their job is right now? Are they clear in their role in the world?
Well, I think knowing what their job is and knowing what their role in the world is, I think the second question is the harder one, because their whole legitimacy has been called into question with China setting up its own kinds of financial institutions. So one thing I'm really interested in is this debate about the basket of currencies that the IMF manages and whether or not the Chinese currency is going to make it in there, because China has now moved from being an engine of global growth. It's now on the precipice of becoming a real pillar of the world economy and the world international financial governance system.
Does the bond market know how to read the Fed these days?
I think that it does. I think that the Fed's being very transparent. They've put in a lot of effort into that, and they understand that it's about the data, but they read the data differently from the Fed. And again, I was contrasting the role of the IMF and Christine Lagarde versus Yellen and the Fed. The market has still another kind of approach. So it's looking at the same data, but their job is a little bit different. They've got to price things a little bit differently. Janet Yellen's been very articulate on this point. The bond market has to look at the full distribution of outcomes, the tail risk on either side, versus the Fed, when they put out those dots, they're talking about their central forecast.
But those dots are going to come down. The critical point here, what we've learned through the month, is the dots are going to migrate lower.
Yeah, they're going to keep migrating lower. Because the Fed's got to look at the central forecast, and their central forecast is always going to be optimistic, because they're partly in the job of maintaining confidence in overall growth and especially in inflation.